Hi everybody. Today we are going into an interesting video. It's an awareness video. Like in option trading, everybody is actually interested in option trading, but everybody does a lot of mistakes in their earlier part of trading career. So there are a lot of mistakes. So in this video, we are going to just like in detail discuss about the various mistakes we do and how to avoid them. Okay. Now, first, before going into the mistakes, we are going to see like what is the problem with option buying. Okay. So option buying is really dangerous. Yes, no doubt in it. Why? Because as per the statistical data, it shows that 90% or more than 90% of option buyers are always losing money. Why? Like this is a game where many players are fighting with a lot of huge money. FAIs, the market movers, operators, big hands, HNIs, DAs, we call them by many names. So there are a lot of participants in this market. So the person who has the better knowledge, or the person who has a lot of money, they move this market. So we retailers are always a tiny part of this market. So they take money from us and make us lose, so that they'll make money. So this is happening for a long time, and it will happen again for a long time. There is no going to any change in this, because if you take the number of people coming into the option buying, the problem is greediness. Quick money is the word everybody uses. In option, we can make quick money, yes, and that's the same reason and the same way we lose money quickly. So we must have a lot of knowledge and also luck favor. So unless you have a lot of knowledge and a favor of luck, you cannot win in option buying. So it is just like a lottery, that's all. No, this would be the better comparison. In option buying, it is just a lottery, that's all. So you win sometimes small money, sometimes you win a big money also, rarely, but most of the time you end up with zero. That is, you lose the money you invested in, that's all. So there is, just compare option buying with lottery alone, that's all. Okay, now we go into the problems. These are the normal mistakes which traders do in their trading career. Okay, buying at the higher price and selling at lower price, this is a common mistake. Then over trading, revenge trading, and everybody used to know that this recent term of stoploss hunting. Yes, and there is a general problem of following others trade. Okay, you want someone to give trading calls either for free or money. You need someone to give a trading call so that you can make quick money, and that is a mistake. And again, lack of patience, the most common problem and the most biggest mistake, and everybody used to do at some point in their life, is booking small profits but ending up with big losses. Okay, now we go on to the first problem. Before going back to this individual problems, a general opinion, or like a general tool which helps us to overcome all these mistakes, is just technical analysis. Okay, so everybody can easily learn technical analysis, provided you have to spend a lot of time in the market and do some homework regularly. Okay, so if you have a passion for a trading career, definitely learn technical analysis first, so that every trade should be based on the support and resistance, and every entry price, target price, stop loss has to be that definite. Only if you know all this entry and target and stop loss, support and resistance, you can at least have a good fight with these bigger players who are in the market already. So equip yourself with weapons and strategies so that you win against these big players. So without learning technical analysis, one cannot survive in this market. Okay, so that's the first and foremost important thing to learn. Okay, now we go on to the first problem of first mistake: buying high and selling low. There is usually there is like people will be saying, whenever I buy, the prices suddenly fall, and when I sell, the prices suddenly shoot up. What is this? Why is this happening to me? So this is the problem which everybody is actually feeling at the starting point of their trading career. There are two types of market. One is a trending day. See, in this chart you can see the market just opens up here and goes up, goes up, goes up, goes up, goes up till the end of the day. So these are very, very rare trending days. Say for example, if there are like 220 trading days in a year, 240 something, okay, and that you can see around 20 to 30 days of a rare trending days. So literally that means you'll get 2 or 3 trending days per month. That's all. In 12 months, you'll having just 2 or 3 days of trending days in a month. That's all. But most of the days are range bound days. That's the key point. Range bound days are the highest number of possible days in a market. There, this problem will always come. You will buy, suddenly the prices fall. Then you will exit. Then after that, the prices shoot up. Say, now check this chart. So this is the point. See, the prices coming down, going up. So normally, when you see green candlesticks or the prices going up, you'll be going up and buying. You never know that is a resistance. So unless you know the technical analysis, you will buy when the prices go up. Suddenly the prices come down. You will keep a stop loss and exit. So you will buy high and sell low. And after that, you think that the prices is coming down because there is a series of red candles. You think, okay, it is going to fall down. You will go and buy a put option, or you short the like stock or index. Suddenly the prices jump from there and go up again. Then you will go up with a stop loss win, or you will end up with loss. So this is just the opposite of trading. So this is happening because this is a range bound market. You can see the chart is just trading in between a box. So what is the solution? So you have to clearly find out, yes, this is not a trending market. It is trading inside a range. So what I'm going to do an ulta trade. That is buying low and actually selling at the high. So whenever I see a series of red candles, I'll derive my support in the chart. Okay, support and resistance. You have to draw. So this is a support line. Here the market has taken support. So whenever the prices comes here, I will buy again. So see, the chart is not closing below, and after a few candles, the prices goes up. And here see, this is the resistance line, because here the stock has been rejected. So this will be again resistance. So whenever the prices go up, I will sell here. So if I am going for a long trade, I have to buy at the support and sell at the high. If I am going for a short trade, I have to sell at the resistance and buy at the support. So this is the actual rule for going in a range bound day, not the other way. So only in a trending rising day or a trending fall day, you can just buy anytime or sell anytime likewise. But in the range bound days, always do support and resistance and take trade like that. So this is the way to overcome this problem of buying high and selling low. Okay, that's the second problem. Over trading. So there are two kinds of problems in emotional trade. When we are like very emotional, we have some problems in our life. So if you just sit and trade with those kind of emotions in your mind, you cannot control the trade, or you cannot control your emotions. So whenever the emotions are playing big, you will be hitting losses only. Most of the time you will be end up in loss, and you will do a lot of mistakes again and again. So learn to control emotions, okay, and be conservative. So what is conservative? You just come up into a trading day, you sit, you earn a profit in the first trade itself. You think, okay, I got 2,000 rupees today, I got 5,000 rupees today in this trade. Okay, I'm just leaving it. I'm enough. It is enough for me. I'm not going to trade further, because if I go further, it will take a greediness higher. So then I'll go for over trade, which will end up in a big loss for the entire day. So never overtrade. Okay, so be conservative. If you think this is enough, stop trading, that's all. Or after the first profit trade, what you have to do is you take the risk of the profit alone. Like this is the second point. You have to, like for example, I got a profit of 5,000. In the next trade, I should keep a stop loss within that 5,000 alone, so that it will not go into further loss and I will not go for a over trading. That's it. So this is how we have to go for the control over the over trading. The next point, revenge trading. So this is also another emotional mistake only, but a small difference is there in the over trading. Here what we do is same kind of a problem, but the first trade we go for a loss. Okay, then our mind gets more and more emotional. Oh no, I have a commitment today. I have to meet my commitment. I need money. I am suffering loss. So I will put my entire capital in and I will recover the loss and get double profits. So this is called revenge trading. When you do that, the market will be waiting for you kind of a people only. Okay, the market will be waiting the people who are frustrated, who are prone to do mistakes. So when we bet more and more for the revenge trading, we lose the entire capital in that particular day or a particular trade itself. So what we have to do, when there is a mistake in our trading, better take a break. Take some break for a few hours. You wait for the next better trade, regain confidence. Okay, regain confidence and then come back with a strong mind. Okay, I'm happy now. I'm not going to do mistakes. I'll wait and I will go for the next trade which will give me better profit. So have little emotions or reduce the emotion level and go for a trade which gives a lot of confidence in you. Don't take any trade when you are in a doubt. Okay, the fear of loss is the biggest weapon against you. So try to control your emotions and take a break whenever you are in profit also or in a loss also. Take a break. That is the healthy way to maintain your portfolio, so or your track record of profits and losses. Okay, then another famous thing, stop loss hunting. This is an interesting thing. Actually, this is not our mistake. Okay, the stop loss hunting is not at all a mistake done by us, but big players used to do for the small players. Like the big players will be hunting our stop loss to make us lose and earn money from out of it. So in this, you can see the chart. Okay, so you see that I draw a resistance line here, and I see a red candle after hitting the resistance. So I take a trade here, expecting and keeping the stop loss here. Okay, because the chart has hit the resistance and given a red candle, so that it will not cross above. Okay, now I wait for a particular trade with the same stop loss. Here and here the stop loss is not at all hitting, so I am comfortable. But in the next trade, there is a huge wick. The prices suddenly goes up. It will give me fear. Oh no, the price is going up and I'm sitting at a loss because I shorted here. I bought a PE here, but the price is moving up. Then I will be in loss. On seeing the prices moving up, I will be suddenly booking my profit. Booking loss there, because my emotions are in play. Why? The emotions are triggered by the big players. They want the price to go up. They want us to hit the stop loss. Okay, and the problem is suddenly when you exit the position in that candle actually closes down. So I think this everybody would have experienced this. Yes, I put a stop loss, I exited, and then that candle or the next candle itself, the price comes down and gives me profit. Now I am sitting at a loss. Why this is happening to me? So this everybody would have been experiencing this. So this is a solution what we can do. Okay, don't watch the MTM, just watching the market. You have to wait for this candle to close. That is the best solution. Okay, you never take decisions on the price movement. Wait for that particular candle. See here, you waited for this candle to take an entry. You put a resistance and the price is coming down, so you took an entry. Now only if the candle closes above that resistance alone, you have to put exit, or else you have to wait. See, naturally after that point, no candle closed here. Further prices has come down till here. So your trade was right, your target was right, even your stop loss was right, but the emotions made you to book a loss. So this is called a stop loss hunting, which is done by the big players. So there will be fake moves like this. So never look at the wick, look for the candle to close. Okay. And another psychological point is here I buy a price at 100. Okay. Now if I keep like 10 rupees, it's a stop loss for me. Don't put a stop loss order at 90. Go for, let us, don't go for round numbers. Go for like 89.75, 89.5, something like that, which is below, so that the chance of hitting the stop loss will be less. They knew that if a person buys at 900, they used to put a stop loss at 95 or 90. So purposefully they will move the price to 90, and from there it will shoot up. So you have to take a little more smaller risk of reducing the stop loss below the exact stop loss which you thought. So these are some tweaks, psychological numbers. Okay. So this is how we can escape from the stop loss hunting. Next. Following other trade. A classical thing which I think everywhere it is happening. Everybody wants a mentor. Okay, we need a mentor in our life. We need people to follow. We need experience from them. And most probably the problem is starting where, when you need a trading call from other, you go for groups, you go for some WhatsApp group, Telegram channels, and some other groups. You ask them, give me trading calls, and they are also advertising that we give calls which will give 100% returns, 200% returns. Likewise, there are a lot of marketing strategies that. So when you follow the others trade, what will problem will come is, when you make profit, you will praise them. Wow, this group is awesome because that trade gave me a profit. And another day when we lose money, we'll start to troll them. We'll even curse them. This is a fraud group. This is a stupid group. Yeah, these are not all giving good levels. I lost my money going into this group. So what is the problem here? Either the group or by us. So my suggestion is that in reality, you are not going to gain anything by praising a person or cursing a person. So what you are going to gain from other is their knowledge of the trade. So don't follow anyone's trade. You better follow the technique what they are using, what tools they are watching, what kind of a parameter they are keeping for their trade, and how they take trades based on the technical analysis or any other fundamental analysis or these global market scenario, likewise anything. Okay, take the knowledge from them. So don't follow their trading call, because when we are growing, some our parents may keep they may take their hand and they walk us with them. Okay, so when we start to walk, we need some support, and once we are growing, we have to run ahead of all of the others. So only till the support is needed, you need some kind of a person to guide you. So take their knowledge and you put confidence in your trade. So when you make profit, you think, yes, I have a knowledge now, I can make money in this market. When we make loss, then take oh, I made some mistake. Okay, now I'll overcome my mistake and I'll correct myself to win big next time. So this is how the best way to avoid this kind of a trading losses. So don't blame others for your loss. Okay, because you are following someone else. So there is no kind of a growth for you unless you start to follow your own trading calls. So you trade based on your knowledge and gain knowledge from them. Learn a lot of things from a lot of other people. Go to groups, you pay them, you learn the techniques and start to trading yourself. That is the best way. And okay, and lack of patience, the most common problem, one of the most common problem. So here is lack of patience will happen to anyone. So because we used to see this MTM, whenever we see profits, we will be just booking, and then the prices go to a big target and you will feel, oh no, I booked little profit, this price is shot up. I sold at 50, it went up to 120, oh god, there is no luck for me. So this kind of problems we face everybody. At least we are not making losses, so that's why that way it is better to having at least small profit. But still, when you need to go for a bigger target, avoid watching the MTM screen. That is the solution. Don't see the MTM screen, watch the chart. Okay, so chart will give you a better profit and a discipline in trading. When you just see the MTM, oh no, 1000 rupees loss it is showing, I'll book, I'll exit, then afterwards it will come to profit. So these kind of things will happen only when you are seeing the MTM screen. So avoid watching the screen after the trade, watch the chart alone. Okay, or first and foremost, you go as an investor. Once you started to move as an investor, that investing pattern will give you a lot of patience. It will teach you how to be patient, because in investing the prices will not move up because you buy in a slow quantity. So you have to put more and more money. You have to study every day about the company, and that will give a patience. Only for getting 20 to 30% returns, you have to wait at least for months. So that way you will get a lot of patience in this market. So try to be more of an investor than a trader. And after that, once you are a very good investor and you have earned a lot of money in this market through investing, use that part of money into trading, and that will multiply your money. So be an investor and then a trader. That will give a lot of patience to you. Finally, the most important problem for all of us in our trading. Okay, so booking small profits and big losses. So this is a main problem which almost everybody would have faced in their trading career. Yes, the multiple reasons are there for this. The fear of loss is the most important thing. Whenever I feel have a fear of loss, after seeing the MTM, I'll booking loss. And lack of patience is also another reason for this. And getting emotional on watching the MTM. Oh, today I took a trade. It took into 2000 rupees profit immediately. Oh wow, I'll book it. But sometimes it will go into 20,000. So this is the problem when we do a lot of mistakes. Particularly we'll be booking small profits, and I think this phrase will be apt for everybody. Sir, I took a trade. I booked a small profit. After that, the price shoots up like a rocket. I sold it 50, it went up to 200. I never imagined that kind of a rally. But next time, when I waited that it will go to 100 or 200, I lose my entire capital because that option goes into zero on the expiry day. So what is happening to me, sir? Every time when I take the trade, this is happening, sir. Whenever I wait, I book a huge loss. Whenever I book small profit, okay, then that time there will be a bigger profit. So what is happening to me? But remember, this is happening to all, not only you. So solution, it's an important solution. Actually, this solution will be looking very simple, but it is actually speaking, this is more important, and you have to need a lot of training to overcome this problem. Okay, first define the loss. Okay. Before taking the trade, you have to define the loss. What is the maximum loss which I can bear today or this week or month, likewise, or in this particular trade? Okay, I'm investing 20,000 rupees. Okay, I'm buying an option at 200. I can lose like 5,000. So I'm getting a stop loss at 50 point. Okay, now what I have to do is I have to just put a stop loss at 149.5. As I said, it is not a round number, so I'm going for 149.5 because I'm ready to lose 50 points. Okay, if prices comes to 149.5, I'll book a loss. Okay, but it will be limited as I have determined my loss for that particular trade. That's all I can. So I will not wait further. I have to be strict on my stop loss. Okay, my loss is limited now. Okay, on the profit side, this price starts to move up and it goes to 250. Now it will be tempting for me. Oh no, it is 250. I have to book profit now. It will be tempting now. Now, what we should do is, do not put a selling order here. Okay, you don't go for a selling order. Instead, you put a selling stop loss order at 210 near the cost price. Okay, now your capital is safe. You bought at 200, price is at 250. Don't put it at 230 or 240. It will hit. You put a stop loss near your cost so that at least you will get your capital back without any loss. Okay, now you wait. Now the prices, if you are lucky and it is a trending day, the price will move to 300. What you should do? Now you could you should modify your stop loss to 250 or 40 somewhere. So now I am getting the actual profit. Okay, which tempted me, but the price is trading at 300. Still now it is not hitting my stop loss. What if the price just goes to 400 or 500? So imagine you book small profits, because whenever you see to 250, you sell it quickly. But now here I just modified my stop loss alone. Now the price is sitting at 400. I will modify my price to 300 or 350. Now what happens? Sometimes there will be a profit booking at that point. The prices comes down. My stop loss will hit somewhere around 350 or 360, which is my trailing stop loss alone. Now I will not be hitting my stop loss at all. Okay. Now if the stop loss is little, I will have lost 50 point. But now I took a profit of 150 point. So now if I follow this clearly every trade, what will happen? I will either trading with smaller losses, but when there is a trending day, I will be sitting with a big profit. Okay, so this is the art of converting your trading like style into booking small losses and bigger profit. So remember, you never know it is a trending day or a range bound day. Okay, if it is a range bound day, buy at low and sell at high, and put a strict stop loss so that your stop loss will be limited. Never put a big stop loss. You should enter only when there is a smaller stop loss, so your loss will be limited. But whenever a trending day comes, your trailing stop loss will try to earn you a bigger profit than you actually expected. Okay, so like these are the solutions, and I hope this will be an interesting like awareness video for all. So try to practice more, learn more knowledge, learn more technical analysis. And if you think this video is really helpful to you, please watch and share this video to all like